Hey there. Good morning, everybody. Christopher Inks with Texas West Capital. It's just a few minutes after 11 a.m. Central Standard Time here on Friday, the 9th of April, 2021. If you're in the U.S. and you're concerned about taxes, remember, it's been pushed back to May now. So, last year, I think we had, June or July? And this year, the tax date's been pushed to May. So, you've still got a month and a little bit of change there to kind of get your taxes done and get them in, or get your extension. But if you get an extension, guys, remember, if you owe any taxes, you still have to pay those taxes. You're still going to get charged interest on the months, because your extension will run through like October. So you'll still have to pay interest on the taxes that you haven't paid by the time you pay them. But if you don't get the extension, then you're also going to have to pay other fees, which are a lot more each month. So, if you don't think you're going to be able to pay your taxes on time, definitely get the extension. The interest rate is pretty low, but it saves you, more importantly, from the large penalties and whatnot that they'll keep tacking on there. Not financial or tax advice, but pay attention anyway. So let's see, who's here already? Mark, what's up, man? So here's that. Ties, good to see you. Bianca, hello there. Done one too many too. Good to see you checking in. Hey there, Spiral Architect, Nevlusian, what's going on, guys? Data. Rick, hello, sir. You checking in from the Netherlands, man? That's awesome. It seems like we get a pretty good, pull from the Netherlands and the UK. There are other places as well. We get people from Czechoslovakia and Austria and Australia. Australia is decent for us as well, too. So I think we've even got one or two from Japan. So that's always cool. But good to see you guys here. Listen, I'm going to go ahead and do this, guys. I've had people, getting a hold of me left and right here for a while now since we did the last, the discount we had for the annual Tier 3. And some people weren't able to get in at the time, because we only release a few at a time. So it's kind of like, you got to be in there and get it, or if not, you have to wait till if we do it again. So what I'm going to do, I can't let everybody have the discount. There's too many people asking for it. But if you use this discount right here, code is here, and it's on howtotradetowin.com. If you use that code there on the annual, Tier 3 annual, you'll get it for less than half of what you would normally pay month to month for it. If you're paying month to month, you're going to pay $199. If you get this and use this discount here, then it's going to take you below $100 a month. But of course, you've got to pay for it all up front. You pay for the annual. But if it's your thing, guys, you've been waiting and you're looking for a great discount, there you go. We've only got a couple of them out there. So again, first come, first serve. If you do it and it doesn't work, it's because it's gone. But, giving back a little bit here and giving you guys a little chance to get in inexpensively. By the way, it only works for new members. So keep that in mind there, all right? Hey there, 51, what's up? Luca checking in from ITA. Good to have you here. Josh Johnson, what's up? Mark says the EU crowd loves them some Texas. Texans love us some Texas too, man. I'll tell you what. But anyway, guys, if you want to join us over here, there's a lot more than even what we got here. I still haven't done this. This weekend, we will be updating the website. We'll be cleaning up the back end in the members area, getting some special things done back there for you guys. So that's going to be exciting. We'll correct all this up here. We've got over 70 hours of educational video content now. Multi-market trade setups, over 20 assets here, daily and intraday, twice weekly crypto index updates, stuff like that. So a lot of great stuff going on. We'd love to have you there. You can come to this page right here and just scroll on down and compare what we have listed here, right here. And so if it's got a red lock by it, guys, you don't have that on that tier, okay? And like I said, we've got a little bit more than actually we've got listed here, but that update's coming this weekend. So, let me kind of show you guys something here real quick, as a matter of fact, because I'll tell you what, man, this weekend, not this weekend, but this week here, I was really kind of just, and anytime somebody says something really great about what we do, I sometimes I don't really know how to take it, I guess. I sit here, and you can ask anybody that's in there, I kind of put my head down, I do the work, trying to make it, the best thing possible for our members. And so this week we've actually, had more than a few great comments. Let me see here though, but let me see. I'm kind of here. We've got, here we go. So I mentioned this comment here by a new member. It's their first month in. They said, thank you for all you do. Really been enjoying the first month, and the value and education you provide is worth more than the price of admission. Thanks again. I love sharing stuff like that because I always forget to do it because I'm always doing the work out there. But then we have another member here checking in saying, really a lot of value. But there's also a lot of great traders in our Discord that give it even more value. And that's what I keep telling you guys. I don't know if people really believe me when I say it, but we have actually got one of the best groups of traders out there, guys. And beyond that, they're not, egotistical and whatnot. They love kind of sharing their thoughts and their ideas and helping you understand what they're seeing and why. And I think that just really, says a lot for what we do here. So we've got a couple more. I haven't even added them here that they were talking about there and comparing us to other groups there the other day. But anyway, guys, we'd love to have you in there. It really is such a great group of people to be a part of. Oh, let me catch up with you guys here. Hey there, Telluride, what's up, man? Train Crypto checking in. Good to see you too, man. So we've been talking about this playing out here, and in Discord, man, it's almost been just basically a play-by-play here as we've been working into this. This was our initial target, and we still have a potential lower target here. But right now, what we're looking at is we're looking at potentially, this WXY here is, this is a 1, this is a 2, WXY. So it's potentially complete, but there's always the possibility, especially with the way in which we're advancing here, and this is really unclear. This is a really muddled count here. But there's the possibility that we could be getting this WXY as maybe an A, and then we're getting this AB, maybe an ABC up here for a B. So it would double top somewhere around this 60,000 area up here, this top area. And then we'd have 5 more down for a C, so you get us a flat correction. That's still possible. The idea is, as we're going up here, we want to get above wave X. We get above this 59,462 area here, and that's going to add confidence to the idea that, WXY is done, wave 2 is done, and we're headed up. But there's never any guarantee. Remember, there aren't any guarantees in trading, guys. No matter how you're trading, what system or technique you're using, there are no guarantees, guys. So what you have to do is you have to go, okay, well, where are my validation and invalidation levels? At what point is this at least starting out as it should be? Or at what point does it do something else? You go, oh, well, it's not going to do it. Beyond that, then you look for levels that kind of increase your confidence in it. And so, when you're coming through here, if this is an ABC down here, then your first move is above wave B here. And so we've got that, and that should be your first indication that the bottom's in. And then you get above your wave X here because WXY, your wave X there, and that gives you added confidence in your trade here. But I don't want you all jumping off the edge yet and get overly excited. Again, this still could play out as a flat correction heading down. Now, that doesn't mean that when you're down here, you can't go long, until price starts pulling back. Sometimes I think people do that. They get fearful. And the fear generally, guys, when you're trading, especially fear just in general is the unknown. When you don't know what's happening or why or what even may potentially happen, okay? When you're new, when you're green, when you're fresh, that's where fear comes in. But when you learn to do a thing and you learn to do it correctly, much of that fear ends up dissipating because all of a sudden, I say all of a sudden, however long it takes, you start understanding, okay, what's going on? How can, when you look at the charts, how does price generally move? And again, that's probably one of the biggest benefits of Elliott Wave is just to have an understanding that things don't fall or things don't rise forever. Price moves in fives and threes, basically. And just that little bit of knowledge right there can save you from freaking out and just selling just because things are dropping all of a sudden and you weren't expecting it. Or buying, it can keep you from buying with FOMO when things aren't looking right, right? So, the idea is that anything you're doing with trading just helps you become more and more comfortable with the market movements so that you can find better entries and exits and stop losses and whatnot for yourself. Now, from a pivot standpoint, the fact that we've kind of bounced off the S1 and pushed above the pivot is normally a pretty bullish thing. Now, the caveat here is that we've had this drop down below, push back up. Drop down below, push back up. Drop down below, push back up. And so, generally, when you're looking at a advance through the pivot, you usually want it to be the one time. When you have price kind of hovering around it, that could lead to, it doesn't have that same significance of bullishness as what you would normally look through if it was the only time it popped through it. And that's why I say just be careful of this range right here, toward this range top up here when you get to these highs, that, you're aware that it could potentially double top prior to that or at that point. Or even right here at the R1, just getting slightly above it and then pull back down for 5, which would take it more than likely below this swing low here. But even if it does that, guys, it's not bearish. I mean, if this is to run as a flat correction here, say, A, B, C here, and then maybe A, B, C here, and then, 1, 2, 3, 4, 5 or something. This just is setting up for a nice big move up. That's all this is doing. This right here is your final check. This right here is your final check. And you go long off that, and you've got this great move up to 70,000 or so. So, don't think it's bearish if you get that pullback. It's just a correction within this area here. And that's okay. That's a better move for you. So right now we've pulled back. Let's see here. I mean, see, this is the other possibility of why I'm thinking that might actually happen, is because we don't have a leading diagonal here. So if you have a leading diagonal, you may have a 38.2 pullback and then it goes up. But we don't have that here. We've got a clear 1, 2, 3, 4, 5 impulsive. I know I've got this drawn like this. But, wave 4 does not impede on wave 1. So the fact that it stops before the 50 is questionable. So again, wouldn't be surprised to see it pull on down here toward this 61.8, around 53,900. So we'll see. If it does break out from here impulsively, though, above this swing high, I think we're probably good to go for a target up here of 70,800 to 71,200, that range right there. That would be the minimum target range that we would expect for that wave 3. But until it breaks out impulsively up through there, you've got to be aware that it could pull back here. And so, your 1 hour Stoch RSI didn't, it barely dipped into oversold, didn't get to overbought. It's dropping back down. There's a lot of question in the way that Stoch is moving right here, the Stoch RSI. But you did have this bearish divergence at this recent top here, right here around the EQ of this supply structure here. That's kind of pulling it back off there. Now, if we jump to the 4 hour, see, here we go. This is where it gets interesting. So your 4 hours topped out and overbought there. It's curled back down, crossing bearishly. So again, may suggest that somewhere in this area we've got a top coming in and we've got, a bigger movement down still going with your 4 hour Stoch RSI there. And with that, that type of movement would then take your daily back down to oversold here, your daily Stoch RSI. So that's kind of what, if you're looking at other things, those are those other things that could, that would suggest that maybe it might not, break out this time, that it might still kind of pull back and then go. We say the 61.8, but the 61.8 takes you below the pivot. But, maybe you get a quick drop and then a push up. We would at least look at the 50%. You want at least the 50%. So, My initial target on some kind of pullback here would just from the fibs alone would be that 50% at about 55,000. That's right there around the daily pivot. The thing is, again, I still feel bullish overall on this, but the reality is we moved in sideways here between the pivot, the daily pivot, and the daily R1 pivot. And as always, we need to see some kind of test, whether it be at the pivot or the R1. Since we're pulling back to the pivot, it should be the pivot. So if we can get a successful retest of that pivot as support, or test as pivot as support, then we should be good to go and head on up. If we lose pivot support and it just continues on down like this, then you should be looking down here at the S1 at least. And then maybe we have to look at some deeper correction taking place. But remember, at the end of the day, guys, the same thing I've been talking about for a while now since I did this here live, about a week ago or whatever. Remember, I drew this curve up here showing how this price action was printing, higher highs, but they were getting shorter and shorter between them, right? And then we copied this and put it right here, and we showed how it's running support right here. So what you have is this consolidation of price action from these large moves to these smaller moves, and you've got volume dropping off as you do it. So again, whether it breaks out through the top or through the bottom, it should be a pretty decent move. It really should be. Right now, my bias remains that it's going to be, to the top up there. But you can't just, the thing is, as traders, guys, you can't just buy in right now thinking, it's definitely going to go long. Because at that point, you're just gambling. You need to know where you're getting in and why, and understand where those validation and invalidation levels are, those other levels that'll give you that, increasing confidence as price moves through it. I think it's probably one of the best things about Elliott Wave is because it has specific rules, and it also has some strong guidelines as well. And so, if you're new to trading, it helps you make sense of what's going on. But of course, you're not going to learn it overnight, guys. You're not going to learn it overnight. I spent the last 7 weeks now going over Elliott Wave. So that's 7 hours of Elliott Wave there with our Tier 3 members once a week there. Plus, we have we already have our educational stuff on Elliott Wave. Plus, starting next week or the week after, sometime next 2 weeks, we're going to add an extra 30 minutes to an hour every week that Tier 3 can come in and join us, for Tier 3 to kind of just go over Elliott Wave again and again and again and kind of look at their current charts and Elliott Wave structure and, do all these things to help them out. So, that's a pretty great thing there. And as always, it's going to be archived. So if you can't, attend it live, you can look at it there later as well. So great stuff going on there. Lots of stuff we're doing for our members, guys. Again, if you don't know us, if you haven't been a part of what we do, you may not know it, but we do continually add to what we do over TWC. So always trying to make it better, guys. Always trying to do more or do what we do better. We definitely don't just sit around on our laurels, eat chips or something, right? Hey there, Hank, Brian, good to see you guys checking in. Data as well. ARM, what's up, man? Let me see here. Train says there was a 4-hour TD9. Can you please talk a little about how this works? Let me see what you're looking at here. TD sequential, I've actually got it there. Yeah. So TD9 is a DeMark system indicator. But most of what anybody knows in crypto, really, because that's where you guys hang out, right, is just that if there's a 9, you think there should be a reversal, right? So there's a lot more to the system than that. There's 9s, there's 13s, there's different ways of counting them, combos and all this other stuff. I mean, it's really a large in-depth system. But at its most base, if you want to look at it here, basically what it means is by the time you get to a 9 count on there, there's a way in which the candles are numbered as they move up. But when you get to a 9, that signals a pause most often, at least a pause, and a potential reversal. So, you've got this TD9 down here, and price ended up going a little bit lower on the next one, but then popped up, right? So then we just got a TD9 right here, and price is coming back down. And notice, by the way, when your 9s, when they come in areas of support or resistance, they're much more likely to reverse rather than just pause. So, this one right here hits this demand, or hits this supply structure right here. and it gets rejected, right? This one right here was right above the S1 pivot. Like I said, it did come down a little bit more, but then it popped up. So, the simplest way to use it is just to wait, to watch for a 9 and then understand that means pause, not reversal, pause. And if you get follow through on a reversal, then it's a reversal. But it's kind of like, crypto Twitter does these things where they go, really bad ideas. And they say, okay, well, let me see if I can find one here. Like this right here. And they'll say, oh my gosh. They'll say, look at this doji here. That's a reversal candle. No, it's not a reversal candle. It's a pause. If you get follow through to the downside there, in the next candle or two, whatever, then it's a reversal. But there's so many times where you're going to get these, and it's going to continue up. Or you're going to get these, a little bit of bounce there, and continues down. It's not reversing. So when it comes to candlestick patterns and the TD9 and all this stuff, understand them as being, like I said, just being pauses until you get confirmation of a reversal, which means, the next candle coming out or the next 2 candles coming out, showing a reversal of direction. All right? Now, the one thing you can get from this area up here, like I said, this is the TD9 right here, which was a bit of a volume spike here, about twice what it was previously. But then your bigger volume came on that next candle there. Now, the overall candle is smaller body here than this one on greater volume. So more effort, less result, but it did get the reversal. So you're and you've got a bit of a spike of volume here. So you're selling, your supply came in right here and continued to come in over here. So now you need to see if there's follow through. You need to see, do you continue to have some move to the downside? Otherwise, it's just a pause before continuing higher. Let me see here. Senpai, Kermit the Frog. Good to see you checking in. Let's see here. Leighton, what's up, man? Checking in from London. Always good to see you checking in, buddy. Train, you're very welcome, sir. Let me see here. Wolf, is that Wolfanaz? Scott sent you? Oh, man, that's awesome. That's awesome. And you dig the beard, too? I appreciate that, man. It's Texas, Beard's a thing. But glad to have you here. Always trust a man with a beard. Oh my gosh. Tell you right, I talk about the old days, the beard was the indicator, right? Whether I shaved it off or not meant the market was going to do something. You guys are too much. Oh man. So anyway, yeah. So, that's kind of what we're looking at here, guys. So my explanations here are so that you don't assume that things are a certain way just because something locally has happened. A lot of times, as new traders, you don't really know what's going on. So you tend to hone in on the very local things that are happening without understanding the larger picture. So like I said, when it comes to pivots, remember, if it's the first time through that pivot, like here from the bottom, pushing up, so it bounces off the S1 and pushes back up through it, that would usually be a pretty bullish thing. But this right now is tempered by the fact that we've been drop below, push above, drop below, push above, drop below, push above, drop below, push above. So price has been kind of, just oscillating around, between this S1 and R1 area, right around the pivot. So that kind of takes away some of the oomph of the bullishness that we would normally expect on this move up through here. And so because of that, again, and we only pulled back here, not quite 50%, suggests that there is the possibility that this could just be a flat playing out to finish off. And so what does that mean? Well, that means, even if you don't understand everything else, what that tells you is, okay, so if you're long, you're okay to be long, but you're just looking for confirmation of some sort of reversal in this area, especially up here around the swing high. Because if you can get that, if you can get that, then you're going to head on down here, likely below this swing low here. And that means that when it reverses off that's going to be a great entry, a higher confidence entry for a nice long move up. And these are the kind of things that you want to know. Most new traders spend more time trading than they do actually analyzing. And what I mean is they kind of jump in and out on emotion. But you should be spending more time actually analyzing and waiting for the setup, looking for the setup, looking for the higher confidence trade. Because if you do that, that means you're going to have less losses, which means you're going to have, when you do trade, because it's a higher confidence trade, you're going to have a much greater opportunity to actually profit. So there's two things. Which means that number 3 is that you can get where you're trying to get in a faster period of time than what you would be any other way. So all these things kind of, lend themselves into each other to create this this way of looking at the charts that becomes more and more positive for you as a trader. If Scott recommends me, you're in. Hey, if you guys don't know, those of you that don't know, Scott was one of the very first people to join us back in, when did we start? September. Gosh, I guess we started right around September 9th, I think it was, of 2000. Was it 2017? Gosh, man. Yeah, so it means we've been around about 3.5 years now. So yeah, he was one of the very first, one of the very first to actually join in back then. Yeah. Hey there, White R21. Good to see you. Onyx King as well. Busy day. Hey man, busy day's good on a Friday. That means the day goes by quick, and then the weekend's here, right? So that's kind of where we're looking at here. Yeah, and as a matter of fact, guys, it's because of Scott that you can see my face on the videos, and that I'm even doing videos, just so you know. He's the one that said, man, you should be doing that. I was like, man, I don't have time to do that. I'm just trying to do the work for the, for the members. And look at Scott now, man. He's doing great. Love it. So anyway, so that's what we're kind of looking at there. Now, what does this mean with the DXY? Let me kind of load this up here. Okay, we can all just sing the Jeopardy theme song now and just kind of wait. All right. So, again, my idea is that we've got this leading diagonal here with the DXY, and this seems to be confirmed with other patterns, the Euro USD, and other ones that are going on there. And if we are, again, with leading diagonals, many times, the 38.2 is about as far as it gets for wave 2, and then it goes up. Looking at the other counts, I think it's possible that we've got potentially, this is just like a wave A area here. So either wave A completed, or it's got this is a wave 4 of C of A. No, wave 4 of A. And we would expect it to come down a little bit closer, maybe toward the 38.2 here. And then we'd have B up in 3 waves. Then we have 5 more down to C right here around the 50% area, I'm thinking, which is the 91.309 kind of area. That's what I'm looking for right now. So, I mean, I can't rule out that this isn't an ABC here, but just looking at the structure on some of the other, your Euro USD, your USD Yen, your Aussie USD, your Great British Pound, your Cable USD, all those ones, I think we've got potentially, an A, a B, and a C still here. If we're moving up above the swing high here, then you can just pretty much assume that wave 2 is done and we're heading up for wave 3. There is absolutely nothing in the chart, honestly, that really screams to me that right now we should be thinking about further down, further lows here below January. It can still happen. Remember, guys, we still need the move above this point up here, this 94.728 or 74. Let me see. What is this? Just need to write it up here. I always forget. This is the point. This is this 94.742. This is the area that we need to get above. And if we do, that should just go ahead and signal, you know what? There's no reason to be bearish on the dollar anymore. Now, I got a lot of people who argue with me, and I don't know what you guys get out of arguing, but whatever, it is what it is. But they argue with me about the fact that, God, I can't think of what I'm trying to say here. What they do is they're very bearish the dollar, but they're very bearish the dollar because they're very bullish Bitcoin. And it is their emotional fear of the dollar moving up and the value of Bitcoin dropping that propels them to continue being so emotionally bearish on the dollar. And so, I get this a lot, and usually then people return to the whole idea, oh, there's so many dollars being printed, and it's bearish. QE is so bearish, Chris. But here's the idea. I mean, guys, you have to remember, we have been doing QE here since 2010-11 right here. We've been doing QE all this time here, and the dollar has gone up in value. So if QE was bearish, then this makes no sense. This should have gone down. So, people continue to try to argue that because of QE, because the government's printing so much money, that the value of the dollar has to go down, and that just doesn't gel with what's happened over the last decade, guys. I mean, it's right there. All this printing, and you go, oh, but so much more is being printed now. Man, you know what? So much more was being printed right here before, after that 2008 great financial crisis there. We were exponentially printing more dollars than what we had been previously. Now we're doing exponentially more than what we were here, but it doesn't matter, because at that point you're just moving goalposts, guys. You're just saying, oh, well, it just wasn't enough before, but now it's a lot more. And the next time it happens, oh, it just wasn't enough before. I was wrong then, but now it's a lot more. You're missing the idea. And so I've spent a lot of time over the last few months trying to explain and add links, to what is actually happening with QE. Where's the money actually going? Why isn't it bearish for the dollar? Why is it more deflationary for the dollar? Deflationary, right? Value of the dollar rises. But, most people don't want to listen to that. Most people don't want to hear it. And so there's only so much I can do. But that's often the argument that I get from that. What are we going to do, right? It is what it is. But if you're going to come at me with, oh, the money printing or whatever, my usual response is, okay, well, you've come at me with that, so I have to assume that you don't understand what's going on. Unfortunately, people tend to get really butthurt about that. Not a whole lot I can do about that, guys. I'm not here to hold your hand or to, baby you. You're adults, time to understand how to take the world, okay? I don't try to be rude to people who come at me with that. I try to help them understand. But, again, it is what it is. I can only say it. It's up to you to actually pay attention. But, again, my thesis continues to be that the dollar is going to continue to rise. It doesn't make any sense for it to drop. And if you say, oh, but look at how many dollars it's printing, whatever. Well, I say, well, but look at how much money has been printed, with the euro or with the yen. And then when you compare it to things like, your output, your trade, stuff like that, all of a sudden the U.S. is like 3-4 countries down from the top. It's not the top. Japan's above, the euro is above, the eurozone is above. All these things end up being above it that are, so in other words, saying they're worse off. So in a race of everybody doing not so great, the U.S. is doing better than the other ones. See, and then that's why you get the dollar increasing against the euro, the dollar increasing against the yen, the dollar increasing against the Swissy and the cable, stuff like that. So yeah. Let me see here. What about Hank's WXY count for the DXY? What about it? I don't, it's not my count. I don't agree with it, but again, for me, until it gets, you have to get above this area up here. If you can get above that area, then you're good to go. As long as you're below that area, what I'm saying here as far as my count may not work out. So, I've got my opinion, my idea of what's going on with price and where it's headed and why and all these things, but I've got my validation level here. And if we reverse before that and we're dropping down below swing low here, guess what? It didn't work. Until it gets above that point, I am well aware of the distinct possibility that price could continue down lower. This is what I keep telling you guys. Now, taking this from a weekly standpoint, you can notice that the weekly pivot is right there. So again, pushing up above the weekly pivot should be bullish. If you look at where we actually bounced here, it's this structure over here, this demand structure from back here at the lows of this right here, this March 09 was the lows of the stock market here from the great financial crisis. After March of 09, the stock market went up. And so it's that structure there that we found support here, higher up even. It's that structure. So there is significance in this level here. There is market significance in that level. I think if we were to drop below that, I think, that means you're getting down here probably your low 80s. At least. If you're to lose this area here, this structure. But there is significant reason to believe that structure is that reversal point. So, again, you can look at it a couple different ways technically on here, but, that's kind of where we get to here. Now, interestingly, I don't know, maybe we get some kind of, and you guys know I hate these patterns, but, this is, wrong one. Here we go. This is a pretty clear potential shoulder here, right? So left shoulder. Then you get your head here. And I don't know, maybe, you're getting something like this here, which kind of, prints this head and shoulders kind of movement here. Maybe. I'm not a big fan of that, but before anybody else starts talking about it, look, we talked about it, all right? There. Yeah, QE is quantitative easing. Yeah. That's all. That's the reason why your assets have gone up over the last 10 years. The way in which the limited money out of all that's printed, the limited bit that actually enters the market in some level is the reason why the prices have gone up like that. And so, yeah, again, the big evil thing about the QE is that it creates disparity. It increases that wealth gap between the haves and the have-nots. Because the way in which the money enters that system through primary dealers and banks and whatnot, and it ends up with the assets, and the bank, the Fed kind of, backing up these zombie companies and everything else. What it means is if you already hold assets, your assets are going to rise in value. So, and the people that already hold it are the wealthy. Your poor and most of your middle class don't hold it. So your wealthy get wealthier while your have-nots, that wealth gap continues to grow. QE is an evil thing, guys. It's really terrible. Let me see here. Let's see. Man, I really hate it when you guys come in here and try to push projects and get people all emotionally, excited or bearish about something. It's just ridiculous. Let me see here. King Burger, I can't read it, it's in red there. King Burger Ripper says, truth has been spoken. Mostly most countries print more when the U.S. prints more. It's so dumb. Yeah, everybody just kind of continues to do it up. The U.S. isn't the only one in this situation. And then the reality of it is most of the countries in the world are somehow dependent upon how the USD does. How does the U.S. do? Because we're such a large trade partner. We've got such, connections with countries. Where we're, for security and stuff like that. It's in the world's best interest that the U.S. continues doing good. Doing well or doing better than they are, because that means we can continue to provide, the military and the economic and all this kind of stuff. Remember the world, guys, geopolitically, it's all about alliances, And I'm not saying this because I'm in the U.S. and I think we're better than anybody else. I'm just saying that the reality of this situation is what it is. If the U.S. starts going off and doing worse than everybody else overall, in the big metrics and whatnot, then our ability to provide that that defense for these other smaller countries or less capable countries, or that we were able to provide the economic benefit of trade that we do, it hurts a lot of these countries. Now, could they go on and grab relationships with somebody else? Sure. But that's not something that happens overnight, guys. I know everybody's talking about, that China's going to come in and take out the U.S. They've been talking about that for decades, guys. Russia's going to come back and take out the U.S. Yeah. I've been talking about it forever, guys. India's going to come up. Guys, it's many of y'all, I guess, are kind of young because you haven't lived through this. This is the same thing. If you're 40, 50, 60 years old, you've lived through this same rhetoric decade after decade after decade. The dollar's going to lose its reserve world currency status and it's going to, hyperinflate and all. And it's just the same thing. It's been said for decades, guys. And, it's never happened because it doesn't make any sense. Now, can the U.S. lose global reserve currency, USD? Sure it can. Is it something that's going to happen overnight? No, it's not. And as long as it's got the GRC, it's definitely not going to hyperinflate. So, we're kind of where we are now. And so you get the people in there that keep romanticizing the death of the dollar. And meanwhile, the dollar continues to rise, It is what it is, guys. I explained that about if QE isn't inflationary, then why do stocks, blah, blah, blah. Yeah, I explained that. By the way, just so you guys are clear, rising prices are not inflation. Inflation, and I know the government tries to kind of skew this with the way it talks about it, but inflation talks about money supply, increasing or decreasing, inflation or deflation of the money supply. Now that results in the rising or decline of prices, but prices are not inflationary. A rising or a declining price could be a product of inflationary dollars, but the price rising or dropping itself is not inflationary. Okay? I hope that makes sense. Because it's a very important distinction that most people are not getting. Most people don't get. And you go, but it's semantics. It's not semantics. There is significance in the way in which those words are used and what they mean. All right? So, again, QE is not, or QE is deflationary in terms of the dollar. Now, certain subsets, certain things are going to rise in price because of the way in which QE money enters the market. And again, these are things that I've explained multiple times. You can go on my Twitter timeline there, I guess, or whatever. I actually posted a tweet probably a couple of months ago with like 5 or 6 different links to explaining QE for people. So you can look that up and if you want a better explanation of it. But it's not simply, the Fed's printing $1.9 trillion and $1.9 trillion is entering the market in yours and my hands. That's not what it is. Real inflation, money inflation that you need to worry about, that you need to think about is when banks loan money, okay? That's where that monetary inflation that you're thinking about, is tied to. If people are actually paying off debt or, if they're paying off their debt, it's deflationary. They're sending their dollars back into the bank where it's not doing anything. You can print as much as you want, but if that money's just sitting there and it's not actually being used, how is that inflationary? You inflated the money supply, sure, but how does that result in an increase in prices? It doesn't, because you don't have more dollars chasing after the same. Remember, at the end of the day, guys, when you're thinking about prices, what you're talking about is how many dollars here are chasing price. If you have more dollars than you have products, or you have less dollars than you have products, then it affects that price differently, right? Think of it, let's zoom it out even more. Think of it in terms of people. Let's say you have 5 televisions, right? But you've only got 3 people that want to buy them. Guess what you have to do? The price of TVs are going to come down because you've got 5 of them. There's 5, or let's say there's 5 of you selling a TV and there's only 3 people buying them. You're going to keep competing with each other to get a lower price to make sure one of those 3 people buys your TV, right? But let's say let's say there's 5 of you selling TVs and 10 people want those TVs. Well, now you don't have to drop your price because now you have twice as many people competing to buy those 5 TVs. Only 5 of those people are going to get a TV if you limit it to 1 each person, right? So 5 people are not going to get it. So those 10 people are going to continue to bid that price up until, somebody says, well, I'm not going to pay that much for a TV. Until you get the 5 TVs sold. And so it's kind of along the same way there when you've got money coming into the system, If you don't have a whole bunch of extra dollars competing over it, then it changes the price. Or, rather than if you have a few dollars chasing over it. Hope that makes sense, guys. Yeah, QE it comes from the Fed, right? Privately held bank, right? Quasi-governmental, quasi. It's basically a private bank, sure, but its purpose is to keep the government going, basically, keep unemployment low. We know how that works, right? No, don't worry about if your questions are bearish or not. I don't mind. Listen, guys, especially if you're new, please understand, I've got my opinions about things, but the one thing you're going to find out if you hang around is, I've got well thought out reasons for why I believe the things I do, and I've got levels that I'm watching to see whether it confirms or not. But just because you have a different opinion than me, it does not bother me at all. I welcome it. It gives me a chance to explain things. And maybe you might see something differently in a way that I haven't seen it. And that might change my view. So I have no problem at all with people having different views. I have a problem with people being idiots. They come off as jerks and whatever. They don't contribute anything. They don't discuss. They're just smartasses. I'm not a big fan of that. But I'm too old to deal with that nonsense. It's like dealing with 3-year-olds, My 10-year-old son is more mature than many of the people I've seen on crypto Twitter, and that's saying a lot, guys. So, yeah. Couldn't that be... Richie Labamba, what's up, man? He says, couldn't that be a bearish divergence on the DXY weekly RSI? Let me see here. Weekly RSI here. Bearish divergence. On the weekly RSI from the 94 peak with a bearish engulfing weekly. From the 94 peak. The 94 peak? I think you're talking about this right here. Maybe. So yeah, it could be, you've got a higher high here. You've got a lower high here. Sure. Bearish engulfing. Let me see here. Let's zoom in a bit. Not bearish engulfing because this previous week closed here at 93.028, and then this week opened at 93.012. So this week opened lower than where last week closed. So it's not bearish engulfing, but it is a large candle, sure. But remember, one candle does not create a reversal. You need to see some follow through. And so the other thing you can look at now is look at where I've got this blue demand structure here from back over here on the 31st of August. And notice we basically hit the EQ of that. So, this was the move back up here. It worked as support here, dropped down through. Then it was resistance, boom, finally popped through. And now it may become support again. So just as easily as you look at this kind of area and what's going on here, we can also look at where is price bouncing right here. Let me see here. But yeah, so possibly a bit of bearish divergence here, possibly, sure. And that would kind of continue to follow through with what I was talking about. Remember, I was talking about the idea that this is potentially an A here, and then we'll have a B and then a C. And that could take a week or two to play out. So we could see a little bounce here up next week and then another drop down the week after and then a move back up. Sure, we could see something like that. I mean, so this kind of just aligns with what we were talking about earlier. Yeah. Let me see here. You really wish a middle line for the dollar, but that will not happen. Onyx says, I would politely argue that I would use the words debasement and consumer asset inflation to avoid confusion. Yeah, exactly. You got that. Again, most of the people, unfortunately, with, crypto Twitter and whatnot, again, they just say inflation. It's always about inflation. Oh, they're so scared because inflation. Oh, they're so scared because hyperinflation's coming. I mean, my God, guys. No, you don't. I mean, I can't guarantee, guys. I can't guarantee. There's no guarantees in the markets. I can't guarantee that hyperinflation wouldn't work or wouldn't happen. But based on historical precedents and what's usually looked at and the way we are positioned today, I really, at this point in time, do not see how that happens. I really don't. It makes no sense to me how that could play out. I mean, it would require that the U.S. that the U.S. dollar lose the GRC, or GRS. I'm sorry, global reserve status there, or GRC, I guess, global reserve currency. You can say it that way, status. But as long as it's got that, the idea of hyperinflation makes no sense. And like I said, most of what you all see online with everybody talking about hyperinflation or even just inflation with the U.S. dollar and whatever, please understand that there's really no understanding by anybody in there. It's sound bites. It's sound bites to fit narratives. And most of it's posted by people who are very emotionally bullish with Bitcoin. And so that's never a good combination when you're trying to understand a thing. Yeah. How do you recommend that we can make money by predicting the DXY? Well, the way you do this, I mean, if you're not trading dollar futures, is that you kind of, I guess you're talking about in terms of Bitcoin or dollar or stocks, right? You're not, I mean, because obviously if you're going to trade, currencies, it's the opposite side, Euro USD, Cable USD, USD Loonie, Aussie USD, Kiwi USD, whatnot. So, I mean, there's that. But if you're talking about for other assets like Bitcoin or, commodities or stocks or something like that, the biggest thing what you get there is what is the general overriding direction? Where's the general trend? If the DXY trend has flipped here and we're now heading up this way, then we should expect at some point to feel that pressure, that downward pressure on value on things. Because remember, as the dollar rises in value, it's worth more. And so if the dollar is worth more, then if the way it makes itself through the economy is things start taking less dollars to buy them, right? So if you have a dollar that's worth 50 cents and a dollar that's worth $1, right? Your dollar that's worth $1 is going to buy twice what your dollar that's worth 50 cents is going to buy, right? So a rising dollar value puts downward price pressure on things valued in dollars. So but it doesn't happen overnight, guys. There's usually a delay, because it has to make its way through the market, however long that takes. A lot of people, they go, oh, look, something didn't diverge the minute that, the dollar did. So they're not, correlated or whatever. No, it's nonsense. You're looking for overall trend movement there. But within the overall trend movement, it's going to take time to get that reversal going. But if this is a bottom here and we get some confirmation through this level up here, this 94.742 or whatever, then you should start seeing that make its way out there on other assets that are denominated in dollars. Much more stronger. Right now, without getting above that point, we're still kind of iffy. It could still roll over and head lower. But once we get up through that level, I think you're going to see a stronger impact on prices of things. So yeah, that's the way. That's the way that you should be looking at it. Let's see here. Man, I agree, Mark. He says the comment section is a global community, different societies, governments, insights. It's nice to have a diverse group to derive discussion from. It's exactly it, man. Because the way, it's not only the way that I look at the market versus the way somebody else in the U.S. looks at the market. The way I look at the market is going to be different from the way somebody who was raised out in the East looks at the market more than likely. Excuse me, hiccups there. Again, because we talked about that before, where over in the West you have more individuality, over in the East you have more familial, more group action, and so that changes the way you view the world around you, which includes the way you view the markets. So yeah. Let me see here. Let me catch up with you guys. So at the 94 crossover, we should start seeing the market drop. We could see it drop before then. But yeah, I think if we get above that point, I think that's kind of like the tipping point there that really puts a lot of pressure on the markets. You see that the stock markets are advancing lately, but they're doing it on weaker breath and overall weak days. Just the other day, trading on the New York Stock Exchange was at the lowest of the year, even though we made a new high. And it did that 2 days in a row. Again, it's not just enough that price rises, but is it rising on less and less volume? Is that participation level dropping? Because if it is, that tells you you're probably coming to some sort of a top. Whether it's more of a a local top or a macro top would need to be seen, but a top of some sort is coming in usually. Yeah. And Wolfenaz, yeah. So the value of stocks should drop, but remember, this is one part of it. This is probably the biggest part of it, the main driver. But you're still going to have laggards, people who are still trying to buck the trend, who don't believe that it's reversing there. And so as long as they continue to buy, if it outpaces that's selling, price is going to continue to rise. But at some point, people give up. And that's what, you'd be looking for, sure. But there isn't any, it gets above here and all of a sudden the market drops. No. But once you get above this level, the significance of the price pressure should be much more noticeable across, stocks and whatnot. So, yeah. But yeah, again, I think that's the biggest, probably one of the biggest issues, challenges that new traders have with when they're trying to look at things versus the dollar, versus the DXY. They expect that, when price changed right here, they expect then stocks to drop right here, But there's a lagging time on there. It takes a while to get this. This is more of a macro move here. It takes a while to get that macro reverse. At this point down here, remember, I was telling you guys, at this point down here, we were at almost the most bearish that the market's ever been to the dollar. I think they were like 92 or 93% bearish here. And I told you at that time, I said, when you're that far off sides, it's usually the signal that the end's probably right about there. The market doesn't tend to continue to reward offsides trading. And when you're that extremely offsides, where, you are aggressively bearish like that, that's prime opportunity to reverse. And sure enough, we got that reversal out of it, at least locally for now. But, I think it's probably going to go higher, but again, still need that move above that. Yeah. Yeah, Wolfenaz, for sure, man, for sure. And it's like Discord, man. Everybody's chiming in and helping out and explaining things. Yeah. So, that's kind of where we are with that. Let me see here. Pull up a different chart here for you guys. What can I pull up for you? Let's see here. Excuse me. Well, we can take a look at the NASDAQ right now. Let's go ahead and take a look at the NASDAQ, see what we're doing there. And remember, even with the, the NASDAQ and what's going on with that, each of your indexes are going to be different. So your NASDAQ, The stocks that make that up are different than the stocks that make up the Dow Jones, which are different than the stocks that make up the S&P, which are different than the stocks that make up the Russell. So they don't always all move at the same time or the same rate. All right? So, if we look at the NASDAQ here, remember, NASDAQ is very tech heavy. So if the tech sector is experiencing a lot of buying pressure, then the NASDAQ is probably going to outpace to the upside the Dow Jones, which is a much more broad-based index. The Dow Jones, doesn't just lean on technology. Now your S&P is kind of like a mixture of both. It's still pretty heavy tech, but definitely more broad-based than what the NASDAQ is. So when you see something like Tesla rising and Apple rising or whatever, you can probably, if you see them rising at the same time, in Microsoft and whatnot, you can probably assume that your NASDAQ is going to rise. But you're not necessarily going to see the same thing with the Dow Jones. So right now, we've got this move going on here. And we are coming up toward, the end of the end here. If we get up above this swing high up here at 13,879 and 77 cents, that'll mean that this is a wave 3 here. This is a wave 4 down at the bottom. And in that case, we've probably got a 1, 2 working on a 3 up here. And so then our wave 3 target is this $14,099 level. All right? But as long as it reverses prior to this high up here and then drops on down, below what I have here is this wave 4, which is basically this kind of 13,260 area. That would be your first clue then that top's probably in. Continue to drop down there below the pivot, which the pivot will change by, next week at the end of today. It'll be the end of this this pivot here. So next week you have to see where it is. But if it's dropped below that, that 1 hour pivot there, that's a good clue that the top's probably in. But you really just need it to continue on down below wave B here. And once you get down below wave B, which is 12,628 or so, once you get below that, that should add a lot of confidence to the idea of this count here. But it has to remain below that swing high. Now, again, I've talked about the differences here. So if we look over here at the Dow Jones, by the way, you can notice we've got this bit of bearish divergence showing up here on the 1 hour as well. But like I said, if we go on over here to the Dow Jones, different index, much more broad-based. And so this index actually is printing higher highs, new all-time highs here, right? Zoom out to the daily, look at that. Remember, the NASDAQ has not printed a new high, and the Dow Jones has continued to print new highs here. So zooming in here, oops, there we go. Zooming into the 1 hour, we've got potentially a 1, 2, 3, 4, and working on a 5 here at the ascending channel resistance. So looking for a potential reversal in this area here to come on down. But really, if it does, we need this drop here below wave 4 at 32,071 and 40 cents. We got to get below that as a first clue that top may be in. Until we get below that, there's still room for price to potentially push higher, for this wave to continue to subdivide and head higher. Let me see here. Yeah, Hank's mentioning the SPX as well. Yeah, so if we jump in there, if we look at the S&P, I chart the S&P minis here because we've our members trade the minis. By the way, guys, if you're a member of Discord, or if you're not yet, you become, tier 3 or whatever, be sure to check out the discussion channel for, or I guess even if you're tier 2, the discussion channel for the stocks. Leopold Bloom, he's one of our members here. He's been around with us for a while. He does a great, beginning of the day look and end of the day look at trading the S&P, which I'm trying to get over here. My Discord is locked up at the moment. Let me see here. Let me go and do it this way then. But there's just so much great information in the way he looks at it. He does TPO, which is a time profit opportunity. It's a way of using order flow to trade, and so you can learn a lot just by watching what he's doing and reading what he's writing there and everything. And he doesn't do it because he has to. He does it because he wants to share it, guys, with y'all. So again, I keep telling you, we've got these great members, man. Let me see here. Where is my... Whoops. Is that it right there? Yeah, that's it. Okay. And he's just one of more than a few guys. You see a lot of great traders there in our Bitcoin channel as well. So here we go with this. Now, there are a couple of different ways to read this kind of coming up into here. I've just got this one to give it, this is probably the most bullish way to look at it at the moment, which would give us, if the extensions here where they showed up here at 43.56, kind of your wave 5 there. But there is ways to read this where this is getting pretty close to a top here. So, watch this channel here. If you get a break out of this channel and it follows through, well, then you're probably looking at this larger count. If you get a break out of the channel and then a hard drop right back into it, it probably means that that's the end and we're headed down. If you don't break out of it, if you're just in this channel here and you drop through the EQ, you're looking at the channel support as the next target, you're dropping through that. You look at this next swing low, and then wave 4 down here would be how you could play that, move by move as it goes through that. But again, new all-time high here, new all-time high with the Dow Jones. Again, these are more broad-based indexes. NASDAQ is lagging. NASDAQ is still sitting below that thing. Now, that doesn't mean I don't think that it can't go up. Right now, it just hasn't. I gave you that target, and the way it's going to change if it does. By the way, things to learn. When you get with the markets reversing or changing, many times, if you've got indexes like this, so the stock market's changing direction, many times you'll get non-confirmations with indexes. So some indexes will continue higher, other indexes will reverse lower, when you're at that point. They all won't be in the same direction. And when that happens, it's usually a clue that some sort of top is coming in. I'm not saying that's what's happening at the moment here because, again, the NASDAQ is so close to that top. You have to lean toward likely, pushing up through it. But until it does, things are as they are at the moment. Let's see here. Hank says the cubes are almost at an all-time high as well. Yeah, makes sense. Tech stuff kind of doing its thing pretty close to a new all-time high as well. Let me see here. Let's see. If we look at oil here real quick, oil's been a little interesting. So oil, what do I think's going on here? I think what we've got going on here is we've got a top up here, and we've made this reversal, and so we've got this 1 and then this expanded flap for a 2. Leading diagonal for a 1, and then we've got a 2 here, and then a 3, and a 4, and a 5, which gives us this larger wave 4 here. And I believe we've got a triangle going on, as I've got labeled here, which means we should see a move down. Now, whether that happens by the end of today or not, I think, if it doesn't happen by the end of the day, we start getting some good movement down. It'll probably happen, when the market opens next week. But what you're looking for is a move down below wave D here at $58.12 to kind of confirm that this triangle is complete. And then based on the height of the triangle, if this count is done here, as it appears that it might be, that would give us a target down here. Well, wherever wave E ends, it'll be $5.01 below that, which should be your wave 5 target. Right now, they get you around $54.97. Now, I say if because if we look in here, you can go A, B, and potentially C here. But you can also look at this as maybe an A, B, C, D, E. So what you have is an A, and then a B is a triangle, and then you'll have a C up here. So E will end up a little bit higher, and then you'll get the reversal on that. So it depends on what's happening in right here. Again, either this is wave E right here, and we're getting ready to head down, or this is A going up, and then this consolidation is a triangle for B. And then you have C will go up a little bit up here, probably around $60.55 or so, $60.60. And that'll end E, in which case, of course, you'll pull this up, and you get your target back down there, maybe around $55.45. cents, maybe somewhere right around there. But that'll just end, if this plays out, that'll just give us 5 down. So the best bullish case scenario you have is that is A. And then you'll have 3 up for B, and you'll have 5 more down for C. Or it's a bit more, a bit larger of a top here, and this 5 down is just 1 of A. So 1, and then 3 up for 2, and then 3, 4, 5 down for A, then 3 up for B, and 5 down for C. So we'll see how this continues playing out as you do that, though. This over here, okay. Let's see here. So that'll give you that as far as oil goes. We also, of course, track natural gas as well. And so this one has been interesting. I'm still not convinced. By the way this has been moving here, I'm not necessarily convinced at the moment that that this was 5 down here. So I've still got this labeled as 3 and potentially 4 up here. But I do have this alternate count showing here. And so with this alternate count here, this would be 5 down here, and then this would be the reversal, and this would be wave 1. And then you get an A, a B, and a C here as a flat for wave 2 before it heads up for wave 3 in prices. But, you know, again, it's been having a lot of trouble with that. We've had to change this a few times to kind of get you some bullish alternatives there. Right now, locally, the other day I put in this idea that maybe there might be a inverse head and shoulders print here. And it may have. It may have. We've got good volume, good candle spread coming out of it. And if so, the pattern target is up here at about $2.629 up here. But that takes you right now just below the 4-hour pivot. Now, of course, next week when the market opens again, that pivot's going to change, right? But a breakout of this descending channel here should give you a pattern target of about almost 35 cents above the point of breakout based on the height of the channel. But if you get this roll over here and it continues back down here, that invalidates this pattern. And I've got a wave 5 potentially down here around $2.39. And that could finish off your wave 2 right there. Otherwise, this has to actually finish it off over here, and then this is a 1-2. But if it continues going down below this, you know, again, then it starts really kind of, increasing the odds that maybe this is just 4 up here. And if it is, that means this is likely a double top. And so based on that pattern, a breakdown of the swing low here at $2.238, $2.23.8, will give you a pattern target then of about $1.07 based on the height of that pattern. And as you can see, I've got, if that's a 4 and we've got a 5 still to go, I've had this here for quite a while now. That would give us a wave 5 probably around 85 cents or so, is what I'm thinking. Wolfenaz. Oh, so my 1, 2, 3 ABCs, man. Yeah, that's Elliott Wave, buddy. Yeah. That's Elliott Wave. Sure. So, again, that's what those counts are. Basically, it just helps you understand structured movement. How does price really move? Yeah. It's nothing you'll learn overnight, just like anything else in trading, guys. None of this stuff is what you'll learn overnight. But, again, one of the biggest issues that I've seen with new traders is that they jump out there and they kind of try something. They don't even really fully try. You kind of like half-ass it, for a day or half a day. And you say, oh, it doesn't work, and you go on to the next thing, right? Crypto Twitter was real big about that. Hank will tell you, anybody who was around in 2017 will tell you, man, one week it was ICT, another week it was Elliott Wave, another week it was Wyckoff, another week it was whatever. I mean, it was classical charting or whatever. But I'll tell you what, guys, I talk about price action in a lot of different ways because at the end of the day, it's going to be which one of those things makes the most sense to you. They all lead you to the same price. If you do them correctly, they'll all lead you to the same areas, guys. You just have to decide what makes the most sense to you. So I try to expose our members, and even you guys here on public live stream that we do, to different ways of looking at it. I mean, yeah, primarily we've got that, but you'll see me talking often about price action and volume, which is more derived in Wyckoff, because that's my basis. And, my supply and demand structures, which are not normal supply and demand levels. It's my personalized way of doing it, which if you hang around long enough, you'll find that it's actually pretty accurate. But, all these things take time to learn. And so I try to give you exposure and let you kind of figure out what really, talks to you. But I think no matter what you're doing, I think the more you can understand, you don't have to be an Elliott Wave. You don't have to use just Elliott Wave exclusively. I don't. But the more you understand about it, the less fear you're going to have as the market moves, because you understand that market moves in 5s and 3s. And then you start getting, you start becoming more comfortable with that movement. And it keeps you from freaking out and selling or buying something out of fear. Fear of missing out or fear of losing, okay? So that's why, I keep Elliott Wave on here a lot. I didn't used to, because it takes more time, it takes more effort. But, everybody kept getting, asking me. So finally, let's go ahead and do it this way. Hey, Jay, what's up, man? Thank you, sir. I appreciate that. He says, would you mind glancing at steak again? I've been trading it for a really long time. Your advice has helped a lot. Well, man, I'm glad. Let me see here. What's that chart? I do so many of these, sometimes I just blank out. Here we go. What do we got here? Come on, load up. There we go. Yeah, so far, following through with what our expectations were, following through with the count and everything here. It looks like it found support right there around the 70.5. So A, B, C here. I think, just glancing at this real quick, I think we may have a 1, 2, and then a 1, 2, 3, 4, 5 maybe. Let me make sure that 3 isn't too short there. 1, 2, 3, 4. Okay, so there we go. So this is the 3. Current one is moving above it. That means this one has to be shorter than it. And it is. So yeah, I think what we've probably got here is a 1, 2, and then 1, 2, 3, 4, 5 gives us a 3 and a 4. And this is a 5th wave finishing out here. So if that's the case, then we get this wave 3 measurement here. Pull back for wave 4. And it hits the 61.8. I mean, it's hitting wave 5 right there where it normally should. So it's hit our expected wave 5 target here. So in this, of course, it's going to be this 1, 2, 3, 4, and 5 up there. Now, it doesn't have to end there. Remember, it can overextend. But what you're going to look for is if it drops down below this swing low here, this $25 and 0.36999998. I'm not sure I said enough nods there. But if it drops below that, then that should say, okay, this is done. And now we've got, a 1. And then we'd be looking for a 2. And so in that case, if we can get this continued down below wave 4 there, we'll look at wave 2, 61.8 right there at the pivot. So, again, we'll be looking for the 50 to the 61.8, this kind of area here as your wave 2. And let's say we get that pivot. And so at that point then, again, let me just draw with the arrows here. We'd have a 1, we'd have a 2 down to the pivot. If, like I said, if we get to the pivot 61.8. We'll have a 3 up here at around 55.5. 4 should pull back around 42.75. And then 5 should have a minimum target up here of 63.5 almost. So then we should look at maybe something like this playing out if this tops out here. If it continues going higher and wave 5 overextends, initial target would be this daily R3 pivot here, right around $39.80. And I think that's probably a pretty good place because it gets you right into this the supply structure right here, which is in this wick. this time around. And so right there between maybe the R3 pivot at 39.80 and then the EQ here at $40.80. About that dollar range would probably be where I'd see it going if it was to continue going up through there. But like I said, once it drops below wave 4 here, that would be your clue that the top is probably in, and so 1 is done and you're pulling back for 2 after that. So yeah. You love numbers, so anything involving analytics and solid number theories is right up your alley. That's good stuff. Let me see here. Oh, thank you, Bianca. Yes. Jump on that link there underneath the stream, guys. If you're on YouTube, I've got a link there through Elliott Wave International. That's the book that I've always told people when they first come to say, well, where should I look for Elliott Wave? That's the first book I always mention. And so, yeah, definitely jump on that. You can get it up for free now by following that link. And then you can read it online for free. You don't actually have to pay the money to buy it. So, yeah. You know what, Wolfenaz? Do you have Twitter? If you have Twitter, yeah, I guess you do. You follow Scott. Man, go to TX West Capital and send me a DM on there, and I'll send you the link. Sure. Brian, what's up, man? He says in 2017, the 15-minute oversold bounce was a winner. Man, so many things from 2017, right? Oh, okay, you switched over to YouTube and you got it. Okay, I got to catch up with you guys here. Alan, what's up, man? He says, ignoring the Elliott Wave count on the S&P and looking at the daily candles, daily Stoke RSI top, daily RSI and overbought, do you think it's more likely than not we get a decent pullback? Let me go ahead and pull that back up here again. You said the S&P here. I suppose you don't mind me looking at the minis, all right? Let me see here. Let's just close off everything here. Again, one thing that I notice right now is we got this move up, this consistent push up, and the volume has dropped off significantly. We've got bearish divergence here playing out in the 1 hour or the 4 hour RSI up here in overbought. And Stoke RSI just kind of keeps bouncing around oversold. It hasn't made a real move down into it yet. So, yeah, I think there's probably some type of local top probably coming in if it's not already in. If we jump out to the daily, let's see here, daily. Now, yeah, your Stoke RSI is topped out. RSI is pushed up overbought. But man, oh man, if I'm looking at pivots, we moved in sideways between the pivot and the R1, and then we weren't rejected at the R1 to come back and test the pivot. Instead, we continued up through it, and we're halfway up to the R2. If we get any more push here, I think this is pretty bullish, and we might just continue pushing on up. Just looking at those pivots there. If we can get a reversal here and it drops down pretty quickly back below the R1 pivot here, I think that could signal some sort of top in there, sure. Again, 1, 2, 3, 4, maybe a 5 pointing out. But I would want to see a strong, drop from this area here. Get it quick and fast down below that R1 pivot there to really feel better about that. Because normally when you're looking at this, when price moves in sideways between a pivot and the R1 pivot, and instead of getting rejected the R1 and coming back, it just goes up through it. It's this point right here, which is really your, where it's at here is really kind of your, is it going to continue to run all the way through the pivots or is it going to roll back down? If we get an impulsive move up here, then I would expect it probably to run through the R5. But if we can get a good reversal off here and, like I said, drop right back down below that R1, that opens up a retest of the pivot. And then if it continues down below that pivot and really kind of below this swing low here, which is below the pivot, that to me would tell me this is probably the top. And we're probably going to run these pivots down here. If I'm looking at that. Just trading it via pivots. How I would normally do that. Yeah. Bianca says she's working through the socioeconomic theory of finance as well, but that takes a while. It does. It's 800 pages or so. But, it's a pretty easy read as you're noticing. It's a lot of great information. It's not really boring. I don't think it was. I thought a lot of good information in there. So yeah, if you guys haven't got that book, I've got links around taking you straight to it. It's a really great book. I've got one sitting over on my my library right now. So yeah. I'm rereading right now in case you guys were wondering. Let me see if I can pull my thing up here so I can see if I'm giving it so you guys can see it here. This is one of the books I've talked about before, The Sixth Contradict. And so, this is a different way to look at cycles. This is just looking at the recent one here, but Contradict here is again, another cycle theory. So, you have so many different kinds, man. You got, waves. Elliott Wave is cycles. Contradict is cycles. You can look at Hurst. Hurst has cycles. But that's because in life, things tend to, move in cycles. It doesn't continue, forever in one direction or another. So, yeah. Alan, you're welcome, buddy. So, yeah, that's the book I'm kind of reading again here. It's a pretty interesting book. It talks about nowadays. The Fourth Turning is another good book. You'll read that and then you'll look at what's going on in the world today and you go, oh wow. I actually bought my dad a copy of The Fourth Turning and the Socioeconomic Theory of Finance. Sent it to him. He's retired, so he just barbecues all the time. He grills all the time and reads and takes pictures. So I figured I'd help him out a little bit with that. It's good stuff, though. Let's see here. What's going on with our precious metals here? Let's see what's going on with gold. Gold. So, when we were down here, I gave an initial target of the green box, which as you can see it hit and rejected from. And then I gave a secondary target of the R1 pivot, which as you can see it hit and it got rejected from. But gold is trying to pick up again today. So what we're looking for is a reversal prior to wave 1 here. I think we've got a flat correction on wave 4 here. So we're looking for a reversal before wave 1. If it crosses wave 1, then of course that would invalidate it, right? But my overall count coming off the top here is we've got a 1, 2, and then 1, 2. We're working on 3 here. So 3 of 3. And locally within that 3 of 3, working on wave 4 here is what I'm looking at. So that's kind of where we've got gold. As this morning it was down here. But here's the thing. Again, gold's going to respond to the DXY here. And so on the DXY, you see that move up and then the drop back down. Gold's the opposite, right? It dropped down and now it's moving back up. So, yeah. Isn't that a nice double bottom? Hey, it may be, except that we dipped back down into it. We pushed up and pulled right back down into it. If this was a legitimate double bottom, you shouldn't have a drop below this point right here. Let me see if I can kind of do this here real quick. Oh, man, I hit the wrong button. Oh, that's what's going on there. There we go. So, yeah, I mean, if this was a legitimate double bottom here, this should have popped out, came back and retested support and pushed up higher. Instead, it pushed up through it and immediately dropped well back down into it. So, I wouldn't consider that a double bottom, no. Let's see here. I'm surprised gold isn't much lower than it is with all the money shifted and holding in crypto. Yeah, again, guys, be careful with the narratives, okay? I really want to, and this doesn't mean I hate crypto. And I know you didn't say I did. I just want to make this point because I hear this so much. If you say anything that isn't emotionally bullish, everybody's like, oh, you hate crypto. You don't understand it. Oh, my God. Okay. No, you don't understand everything else is the problem. But I don't necessarily believe that people are just leaving gold and going into Bitcoin. I mean, it's going to be some of that, but I don't think it's as prominent as they would want you to think, as far as in terms of absolutes. Because Bitcoin is still unproven. I know you're going, oh man, 10 years and how much it's risen. But realistically, guys, in terms of markets, it's still unproven. Remember, Bitcoin has never been through a recession or a depression or anything like that. So, forget everybody else's views on it. The reality is, if we go into one, we don't know how it's going to react. We can assume that with it being as risky as an asset as it is, that it's going to do horribly in something like that, because risky assets do horribly. Everything does pretty bad, generally in recessions, but especially risky assets. I mean, think about it. The first thing people get rid of when you've got some incoming recession or depression or something like that is your most risky assets, because they're the ones going to take the biggest hit. Yeah, so gold's been around a very, very long time. I don't think necessarily that narrative is really all that correct. Be careful of the narratives, especially, guys, when you're following the big accounts and they start talking about some really large changes and stuff like that. We all hope it's going to. I hope it's going to. I still hold Bitcoin that I bought in January of 2017, guys. So I want it to do well, but I'm not willing to just be blindly emotionally bullish and hope it does. That doesn't make sense, right? So, you've got to be careful with a lot of these, of what's being said there. Try not to fall into or be a part of the nonsense. Oh, you've got a small brain if you're not buying dips or something like that. I get so sick of seeing that nonsense. I mean, I'm going to be honest with you guys. As somebody who's been doing this a very long time, when I look at crypto Twitter, I'm embarrassed. I look at that and I go, there's no way this thing is really mainstream anytime soon. Because the general brain activity that's going on there is all about putting people down, and it's all about all these gigantic views that we hope comes true, but until they do, you've got to be really careful. But yet new people are coming in and getting sucked into this because accounts have 300,000 followers or something, and they think, oh, they must be talking, they must be good, they must be right. And really, it's just because they're cheerleading, guys, because they're telling you what you want to hear. It's the same thing that's been around forever and a day. People that do something similar to what I do with TWC, they'll get out there and they will tell you that you're going to be rich overnight, and all you got to do is these 3 little things, and you're going to make $16,000 in the next 3 days, and stupid stuff like that. And all that does is it gets you to waste money, guys. You've got to be careful with that kind of stuff, okay? You got to be careful, and I know that a lot of these big names on crypto Twitter and other social media platforms aren't necessarily selling you something directly right now, but they make money off their viewership. If you have a large group of people that follow you, you get people who are willing to pay them money to promote their products. And a lot of times you never know whether they're really making money off that, even though they're supposed to tell you, especially if they're based here in the U.S., but they don't. And so you never know if you're getting just scammed or, I say scam, but, you don't know to what degree, they're really talking about what they're talking about. I just want you guys to be careful about that, all right? I definitely don't think that, I think crypto's got a good chance of staying. I do. I honestly, well, no, I'd still be in it even if it didn't. I'd just be making all the money off the, buying and selling, not worry about it. But longer term, again, I'm holding longer term some stuff. And so, I do believe it's got a longer term future with it, sure. Do I think it's going to get 300,000 this cycle? Maybe. But there's definitely no guarantee. Do I think that it's going to hit $3,000 by the end of the year? I guess it could, but do I really think so? I don't know. We'll have to see. And so by doing that, by looking at it that way, at least I'm not, becoming overly bullishly emotional with it. I'm trading the way as it's moving. Just with some bigger ideas, watching those bigger ideas. But I'll tell you what right now, if the economy, craps the bed and goes down, guys, I do not see, I want Bitcoin to do well, but I don't see how it does in that situation. I think that just gives us a big bear market for a while. and then it goes up after. I don't think for a second that if the economy goes to shambles that Bitcoin continues to go up. It'll be one of the first things that's shed. Okay? So, and this is just be realistic. This is being, smart with your money. All right? Mr. Who's the Gamer says, Paris Hilton, laser eyes. Do you need any more take profit signals? I mean, it is what it is. Everybody's kind of involved. I think one of the bigger things was probably that, what was her name? The Tiger King woman that potentially might have killed her husband or whatever. She did that TikTok thing talking about, what'd she call it? Dodge instead of Doge. That was probably a closer to the top signal than even Paris Hilton. But, even I notice things. I've got family members that are really successful doing their own thing. It's not trading. They're successful business people. And they've recently started talking about, Bitcoin and Doge and stuff like that. So for me, that's the same thing as, that's when the people who aren't ever really a part of it, all of a sudden are telling you what you should do. That's the whole shoe shine boy parable or whatever it was there. It's the idea that people who wouldn't normally be in the market doing this thing, all of a sudden are giving you stock tips, right? And so, I'm seeing this in my own personal family. And so, it's not that they're not smart people, but they are not traders, guys. Carol Baskin, that's her name. Thank you. Yeah. So just some things to think about there. Telluride says, I've had Bitcoin for years and traded, but it still does feel like playing a multi-year game of Jenga. It is what it is, guys. And here's the thing. The way I do it is I have an investment portfolio and I have a trading portfolio, guys. And my investment portfolio, I don't touch. I got Ethereum at $15.92, I believe it was, in January, February, or whatever of 2017. Bitcoin at about $1,182 or $1,189, somewhere right around there. Litecoin at $2.71, I think it was. And we've had that big bull market and went up at the end of 2017 and came back down. I didn't touch anything, guys. And I'm okay. I've also traded, though, on the way. And so, if you've got some funds that you can do that, I don't think that's a very bad way of actually being, especially in cryptocurrency. But you have to understand, guys, no matter how much money you're putting in crypto, it absolutely has to be money that you will not miss if it's gone. Money that instead of going and eating lunch out or buying coffee every day or the newspaper, whatever, that's the money. You're looking for the money that it's not going to hurt you if it's gone. Because there are no guarantees, guys. Absolutely anything can happen, government or otherwise, that makes all this crypto stuff just nothing, right? We don't want that to happen. We don't think that's going to happen, but it can happen, and that's the important thing to notice, okay? Brent, man, I appreciate you, buddy. Thank you for saying so, man. I appreciate that. Brian says, the slogan of crypto Twitter is have fun being poor. Yeah. That kind of silliness, guys. You know what? I'll be honest with you, man. If you're spending more time doing that and making funny memes and whatever than actually paying attention to the market, you're probably going to lose everything you have in the market. A lot of times people will get lucky and they'll do really well, especially in crypto because, things can move so fast. But most of the people who make those gains like that, they end up losing it, guys. They end up losing. They give it right back to the market. Again, I keep telling you, it's the same mentality as people that go to the casino. They're just gambling. They're just throwing dice. And they may get lucky. Somebody may get lucky and make a lot of money. But then the casino is going to comp them a room. A nice penthouse, right? Going to comp them tickets to the shows. Give them some free alcohol, right? Why? Because they know if they do, you're going to stay there. And they know if you stay there, you're going to keep playing. And they know if you keep playing, you're going to lose all that money back. Most likely. Same thing in the markets, guys. As long as you continue to stay in the markets after you make that big win, and you really don't know what you're doing, you got to be honest with yourself, the odds are you're going to give all that money back. I have talked to so many people who did that in 2017 and on. Made a ton of money at the end of 2017 and lost it all and more up through now. So, yeah. Let me see here. Mark says, after hearing you talk about that investing profile versus trading, I went out and set up a trading profile and I have my investment hold fund. Man, that's the way to do it, buddy. That really is. Because, especially if you're a newer trader, just assume you're going to lose your trading money. Just assume you're going to lose it. Now, hopefully by doing that, that's going to make you work harder on your risk management. But, and if you do that, then at least it forces you to put some money into the investment side and you just don't touch that. If you believe the market's going to continue going right and up over time, don't stink and touch it. Yeah. Onyx King, he says, it's all a social construct. Banks use more gold now as collateral for transactions, especially after 2008. Basel III changed gold status to tier 1 asset when there's no counterparty risk. Yeah, whole bunch of stuff going on, guys. If you all really understood how banks really worked, there are laws they have to abide by. But man, the crazy stuff they come up with, guys, it's really some crazy stuff. To get around things and to use leverage in a really crazy way. I mean, it's, when you look at that, the banks and the primary dealers, Archegos, man, just, gosh, over $1 billion blown up. Credit Suisse and others, man. Credit Suisse was still unwinding this week after that. And why did they do it? They're giving this ridiculous, it's this way of using leverage. It's not normal. But the fees that they were making off that, and the market kept going up, and they thought, man, we're being greedy, we can't lose. Guess what? They lost. And so it's going to be interesting. Do I do any periodic rebalancing of the investment portfolio? Honestly, when I hold it for stocks and whatnot, I usually do. Not for crypto. Not for crypto. Long term, I basically hold those big three. That's it. So I don't really rebalance or anything in that, no. Yeah, like I said, for stocks I normally do, but again, stocks is a different market than crypto. Yeah. Yeah, so yeah, and the other thing, you guys, to be aware of, especially if you're newer to trading, everybody talks about all these really small cap, they're looking for these big explosive moves. And as long as you're in a general bull market, it'll work. But as a consistent trading strategy, you're going to lose money doing that. Okay? So be careful. The smaller those market caps go, the more dangerous, the more risky it is to be involved in that. Because it takes less of somebody to actually manipulate that market. So yeah, be careful with that. Mark says he sees his trading profile, which is only 2,000 loonie right now, as my cost of learning. I see it as the price of a trading investing course that I can afford right now. That's what it's all about, man. Now, that doesn't mean you just go out there and just haphazardly throw things, obviously. You want to make sure, guys, if you're in trading and you haven't done it yet, if you're just now thinking about getting in trading, make risk management your most important thing you do, your number one thing you do, the thing you spend more time on learning and applying consistently. And if you want a real good way of getting into it, man, y'all can join us for a month. Let me see here. You can do it with... I believe Tier 2 has access to our educational videos. So you can even get in just on 1 month of Tier 2 and make sure you go over that risk management. Go through everything else you can, obviously. Or Tier 3 if you want even more stuff. But, man, I'll tell you what. If you understand risk the way we explain and the way we talk about it, you're going to be so much further ahead than most people trading today right now. So, yeah. Zlacker 101 says, once you got the gains you have, you can do a couple of things. You can withdraw your principal and then let your profits ride, or you can just withdraw and reinvest in other projects. Exactly. Yeah. And, for some of y'all out there, they're looking at different ways of trading and investing and whatever. I mean, if you get to the point where you've got enough in profits, that you can withdraw your original entry, there's nothing wrong with doing that. If you're doing that, then at that point you lose nothing anymore. You just got to make sure you don't then just take the attitude of, oh, well, since it's free money, I can just kind of do all these crazy, really risky things. You still want to grow it. But you'll be amazed at how much less stressful the market is when you know you're not actually going to lose anything. You're only going to lose profits that you've made. You won't actually lose, though, what you put in initially. So it's pretty amazing how that can feel. Sure. See here. Mark says he takes a risk management course every Tuesday and Friday live on YouTube by this bearded guru. Oh, it's what it is, man. It is what it is. But yeah, really, guys, I can't. If risk management is not in your mind the most important thing you're doing every day, and or you don't know how to do it properly, you need to do it. I'm telling you what right now, guys. You will not learn to trade successfully and consistently overnight. The goal is to remain liquid while you're learning, so that way you can learn. Remember what I told you guys. When you learn to trade, this is what it looks like. You start here, and you kind of do this thing here. Okay? So you start here, and you lose a lot at the beginning, or you lose a lot of times at the beginning. But your risk management is to make sure you don't lose a lot of money. And then you get to the point where you kind of break even, and then you start getting, and as you're getting more and more used to the market and you're getting better with what you're doing in your system, then you start making profits more consistently. This is all, people come into trading and they think this is what they're going to do. You never do this. This is what happens, guys. You lose at the beginning, and if you can stay in long enough, you'll get to that point where you kind of flatten out, and then you'll start making that consistent profit there. And this doesn't happen overnight. Usually you get to this point up here, it usually takes a few years. But you know what? What are you doing during that time anyway? If you're going to be in the market anyway, and you're working anyway, then just look at it, be realistic. Okay, well, you know what? What does that mean? That means I'm going to learn this amazing skill that I can use for the rest of my life in all markets, at all times. So, yeah. Onyx King says, TWC definitely improved my sleep restless. I mean, I love hearing that. I love hearing that. It's, that's what it's all about, guys. Hank says the standard change management productivity curve. Management thinks it will be the straight line up, but it will be the Nike logo. Yeah. Again, that's pretty much the way it is with anything in life. Yeah. So anyway, guys, hey, listen, I really appreciate you guys hanging around here, asking questions, talking, sharing your experiences and your stories and your ideas and stuff like that. As always, I hope you guys will continue to come back. We'll be back on Tuesday at 11 a.m. Central Standard Time. But if you'd like to get with us sooner, don't forget, you can jump in there at howtotradetowin.com. See, it's that one right here. And don't forget, that code there at the beginning of the stream there. Use that on a Tier 3 annual if you're brand new, if you've never been with us before. Use that, and it'll get you an average cost of less than 1 month if you're normally paying month to month. It'll get your average cost under $100 a month. I think it's closer to around $90 a month. I've done this a few times here in the last, I guess, probably 2 months or so. I've limited myself to how many I can do this year. So we've kind of dipped into it quite a bit now. So we might use them all up before summer even gets here. But, again, if that's something you're interested in, we'd love to have you with us. Just remember to follow the directions when on the checkout page. Because when you sign up, you're going to have to log into your account. You'll get an email. You have to reply to that email to confirm your account. You need to log in, and then up the top right or the top left corner, it says sync up your Discord username. You got to click on that, and then you've got to put in your Discord username with the number sign and the 4 digits after it right there, and then that'll give you access to Discord there. By the way, guys, if you are a member with us, that second link down, I believe, is the access to the server right there. Or you can come right here and you get on the free side of the server from right here. or of course on my Twitter profile there at DXY Capital. Right here. You see that Discord link right there. So a lot of ways to get in there. Got a lot of stuff going on though, guys. Like I said, we're going to do, I think I'm going to update the back end of the weeks and potentially even the front end a bit this weekend. So there might be some pretty cool things happening when you guys log in at the beginning of next week. All right. You guys have a great weekend. Thanks so much for joining in. But remember, guys, at the end of the day, the only thing you control is how much you lose. All right? Risk management is where you make your money, period. So don't get caught up in all the fancy Elliott Wave and all that other stuff. Make sure you get down the basics of, and as much as you can about risk management. And then that way you guys have a chance to hang around for a while. All right? That's what I'd love to see. You guys have a great weekend. Be safe. Enjoy some time away from the computer. All right? Away from the charts there. And we'll see you either in Discord or we'll see you next Tuesday. Take care.